There will be no holiday cheer for investors this year. Global stock markets are on track for their worst year in a decade, due mostly to uncertainty over global trade.
There's no solution to the trade war. It's difficult getting something positive out of this before Christmas, but hopefully next year will be better.
US President Donald Trump's been slapping tariffs on its largest trade partner, China, and has even targeted allies like the European Union, accusing them of unfair trade.
Of course, they kill us on trade. They kill us on other things. They make it impossible to do business in Europe. I respect China and I respect President Xi, but they've been killing us. The war was lost on trade many years ago. You know, when they were saying, not a free trader, I said, no, the war was lost. But now we're going to win it, and because we have all the cards.
And the trade war between the US, China and the EU has been delivering blows to businesses all over the world. Research shows developing economies are the worst hit by US tariffs on steel imports. Global shipping growth has slowed to a tenth of last year's pace, and the International Monetary Fund's downgraded its expectations for global growth this year from 3.9% to 3.7%. Several countries have laid complaints against US tariffs at the World Trade Organization, including China. Some economists say Washington has to end the dispute before the trade regulator rules on China's appeal.
The WTO is going to be delivering a verdict within 2019, and that will be embarrassing. And my hope is that Trump has enough negotiating savvy to recognize that striking a deal with China before that verdict comes in and making a condition of the deal that China drops its challenge of Section 301 saves the day.
Thank you all.
But President Trump's already threatened to pull the US out of the global trade body. And with no clear goal or end in sight for the trade spat, businesses all over the world will continue to suffer well into the new year. Mobin Nasir, TRT World.
And Daily Sabah financial columnist Taha Arvas joins me now here in the studio. Good to have you back on the program, Taha. So when Donald Trump waged this trade war earlier this year, he was betting that China would be worse off. Is he right?
I think China may have been worse off if this were a spur-of-the-moment trade war. But Trump has long touted his desire to go after China and to get rid of this trade imbalance. The Chinese have had a couple of years to plan for this, and the biggest imports that China is doing from the United States agriculturally, they have begun to find other routes to import. So they're putting it to the United States. They're responding in kind. So and Trump has a lot of his base in agricultural heavy states. So they're going to see if they can match his actions.
And as the various trade wars were escalating throughout the year, there was this huge rush to front-load export orders in order to avert sort of impending tariffs. This is now fading. Do you think we'll see the true impact of the trade war in the new year rather than 2018?
You know, I think we will, but there is a theory that tariffs never work. There is this theory that goods. Ultimately, the country that is best at producing a good gets those goods in somehow. So this doesn't necessarily mean transshipment, essentially fraud of shipping things, but China will make components, ship them to other countries to be assembled, et cetera, et cetera. I mean, China has, over the last decade, begun moving much of its manual labor and much of its low-end tech to other countries as it is, to Vietnam, Cambodia, et cetera. So this may not affect China as much as Trump thinks it will.
Interesting. Right. And when Donald Trump first took office, we saw this rally in the stock market, something that he took credit for. It was dubbed the Trump bump. We're seeing that sort of decline now, not only in the US, but also around the world. Is this linked to the trade wars?
This is linked to many things, but the uncertainty that Trump is adding to the economy is not great. I mean, this has been the worst December for equities in the history of financial markets. We're talking 100+ years. So it's a huge event, but I think what Trump will do is will blame will Mnuchin, his Secretary of the Treasury, and as he has the Federal Reserve Chairman for this downturn, and he will essentially, I think his base doesn't care, and he'll take credit for the bump, but not for the slump. Let's put it that way.
Interesting. And as we know, the US and China are currently in the middle of a 90-day trade truce, during which time they're expected to hopefully resolve their trade dispute. Do you think this will happen, or will Trump take it to the next level?
I don't think he will. I think he will balk at some of the actions that we're talking about, because it's in the United States' best interest for products that they don't compete with to allow them to come to the United States. Otherwise, low-income families will be affected by this. And Trump has already begun his election campaign for the 2020 election. The last thing he wants is for inflation or for prices to increase and look bad for his supporters. So I think we'll see a turnaround here in the near future.
And just very quickly, Taha, what's your outlook for 2019 in terms of global growth? Do you expect it to be sort of bullish, bearish, or much the same?
I think we've had a very great 2018 as far as last 3-4 years. So I think we're going to see a downturn globally. And I think people will invest their money in wherever they find growth. So that'll probably be away from developed markets, frankly.
Interesting. And in terms of equities versus gold versus anything else you can invest in, would you still bet on the stock market?
Well, cash is my favorite asset class because it never goes away. There's no risk. And I think that's an asset class that when you have economic downturns should be reevaluated seriously.
Okay, Taha Arvas, we'll have to leave it there, but look forward to chatting in the new year. Thank you.
Thank you.